All right, guys, so I want to jump right into it. The goal today is to start studying some research reports and start formulating some data science project ideas from it. One of the most consistent questions I get from all of you is, I need an idea for a project. How do I get a project idea going? And it's a fair question, right? I mean, I think that sometimes I get that question because people aren't applying their creativity enough. But it's a fair question because I know that I stress that in my content. I'm a big fan of you having your own projects and your own ideas that you're working with. In addition to that, I also get a fair number of questions from a lot of you who want to go into being a quant, right? Everybody's fascinated with being a quant. Personally, I don't agree with it. I think quant work can be quite boring. Some people who work in the quant field aren't necessarily very interesting. But if this is where that type of work starts, okay? So that's really kind of what I want to do. And I want to go ahead and just kind of walk you through my thought process. So this is a thought process that I developed when I was developing my data science skills, but it's also something that I use today in terms of like, well, how am I going to break down this massive project, right? So first place we're going to start with some planning, right? Any good project always has some planning involved, right? So I want to set out some goals for us, right? One is we want to establish an interest to research. That's very important. I'm going to make that bigger. If you guys need me to zoom anything, let me know, okay? All right, so first thing, right? What are we interested in? What are we doing here, right? What is it that we want to find data for, right? And then two, who's out there, right? You know, nowadays, no matter what interest you have, what industry you want to look at, there's always data out there, right? So how are we going to find that data, or who is producing data for this, right? What size did I use? I want to be consistent. So who is producing data or studies, right? And then the next thing we want to do, what can we do with that data? So here it's, what are the questions we have? Are there places where the study kind of fell short, right? Are there places where you think maybe the study could have done a little bit of a better job? You know, I really wish the researchers had done this, this, and this instead, right? Or they stopped here, but I really wish they took it 2 more steps further, right? That's what we want to do, right? That's the next step in our thinking process, right? And then the order, you could kind of mess with this order, right? And in fact, you know what? I do want to do that. I kind of put this out of order. Let me go back here. I'm sorry. Step 3 should actually be this. This is actually step 3. What does that data or that research report tell us? Right? Because you can choose to take the the researchers at face value, right? But part of you publishing your work is part of the peer review process, right? In the scientific method, you publish your work because your results are supposed to be repeatable, right? That's part of proving that you were right in your study. So you can choose to take them at face value, but what else? What else is there? What else can we do with that data, right? So what does this data tell us? And are there portions we can verify for ourselves? And then are there portions that are not correct? Right? A lot of studies is the interpretation of data. Do you agree with the interpretation that the researchers had? Maybe, maybe not, right? So that's part of it too, kind of applying your own critical thinking skills to what's out there, right? And then I'm going to put this one in a different color because I'm going to highlight this one as being something that would be exclusive to those of you that want to go into quant studies. Because I think that there's a lot of misunderstandings around quant studies, right? So I'm going to go ahead and include another one here. I'm going to make this one a different color so that you guys understand that this is a little bit optional. You know, it really only applies if you're somebody who's really hell-bent on being a quant. And this is something that a lot of those like quant tutorials or even people who want to be quants don't really understand. So this is another one. Is there an investment thesis that can come from the data? A good amount of quant work, including maybe especially things like portfolio construction, begin with some kind of investment thesis. And if you don't know what investment thesis is or what portfolio construction is, spoiler alert, you're not ready to be a quant, okay guys? Because that's really what quants do. Forget all the tutorials, forget all that nonsense that's out there from those experts. This is what quants do, right? So can you form an investment thesis from that data? Right. So really, I mean, that's just the way it works. You know, at the professional level of asset management, wealth management, private banking, things like that, right? For those of you that, again, insist on being quants. All right. Yeah, so I think that's it. I think that's it. I think those are the 5 things that we're going to try to accomplish today. So can I zoom out here? I think right? So those are the 5 things right there that we are going to attempt to do today. All right? Everybody clear on that? Any questions on that? Let me know. Let me quickly acknowledge the chat. Paflon, hey Paflon, we have three people on Twitch today. Woohoo! That's a record, guys. Paflon, hope you're having a good day. Thank you, Paflon, having a great day. Fatima, our good friend Fatima from Morocco says, hey sir, hey Fatima, good to see you. Hope you're doing well. All right, so these are the 5 things we want to accomplish, guys. Pretty straightforward. All right, so number 1. This is, and again, I'm going to keep on trying to tie it back as much as I can to the different things that I preach in my in my live streams, right? So the first thing I always tell people, think about your interests, right? Like, what are you interested in? What makes you happy? Like, what is it that you're interested in? So for me, I've always had an interest in like gemstones and diamonds and gold. I just always thought it was an interesting field. I've always thought about like how it's mined and how like it's in limited global supply. I once read a report that said that if you took all of the gold in the room and all of the gold in the world and made it into one giant bar, like one giant cube of gold, it would be something that would fit in like a 20 foot by 20 foot room, like it wouldn't be very big. 20 feet by 20 feet is like 7 meters by 7 meters, right? Like it's not a very big room or a big cube of gold if you took every single piece of gold in the world, right? And I think that included the gold to be mined too. So I just find that fascinating, right? That can be the case. And I also like it because it's universal, right? I mean, gold is basically an international currency. You can take like a gold coin and sell it anywhere in the world, right? Like you can take a Krugerrand and sell it anywhere in the world. You can buy it and sell it anywhere in the world, right? So things like that I've always found fascinating about the world and about gold. So that's my personal interest, right? So can I find data on gold? Sure. Are there trade groups or research reports that can help me? Yeah, maybe. Right? And, is it something that I find interesting that I'm going to want to write a report on? Sure, yeah. I'd sign up for that, right? So all of these things are my thought process that I would go through, right? So I would encourage you to do the same. What are some of the things that interest you? And is there something there that you'd want to research, that you'd want to just know more about, just because it feeds your inner curiosity, right? Because if it's an interest that you like, one, you'll be more passionate about it. Two, you'll be speaking from a better position of knowledge from it. And three, it'll be easier for you to come up with those subsequent questions that we're going to need in the rest of our research that I've laid out here, right? Because we still need to come up with all of these other items, right? So I'm going to say that I'm really interested in gold. I'm fascinated by it by many aspects, right? I shared before that I once received an offer from a gold company. I didn't come to terms with them because they wanted way too much travel. But, it's just something that I enjoy, right? So that's what we're going to proceed with, right? Okay. So I think that knocks out section 1. We have an interest to research, right? And again, and also just to emphasize, right? I'm doing this away from school, away from Kaggle. This is just me. This is just my own personal interest. This is me being a citizen data scientist working on my own. And this is the type of stuff you can do to build your portfolio, right? These are the types of studies that I'm referring to when I want you to walk into your next interview with 3 articles that you wrote. This is where it begins, okay? All right, what are some sources available for that interest? No need to get fancy here, right? That's it. We just need to know if there's a trade industry. Start there, right? Virtually everything you can think of has a trade industry. Some sort of organizing body that, all the companies belong to. And then, oftentimes it's like a lobbying group to deal with government affairs. But that's it. It's a simple Google query, right? Like, what are the trade industries? And look at that. World Gold Council. Gold trading and the global gold market. Does that sound like a promising lead? Yeah, right? The World Gold Council at gold.org. I'm interested, right? I mean, this isn't hard, guys. You just got to put in the work. So, World Gold Council, that sounds like a promising section. I want to know more about them, right? So I'm going to go ahead and click on that. And right here, we're immediately taken to I'm looking at the URL Global Gold Market. And this is great. It's already telling me about the gold volumes in US dollars. It looks like these are different markets around the world, right? It's telling me where the global centers for trading are. That's great. So I'm seeing India, China, Tokyo, what is that? Singapore. Probably Dubai. Oh, excuse me, Turkey, London, US. Okay. That's great. It's telling me a little bit about what some of these items mean here. So this is telling me this is London. This is telling me this is US. So this looks promising, right? As a high level view, this looks promising for me to understand the gold market, or at least understand it at some level, right? So I'm interested. I'm interested in what these guys have to offer. I'm going to go ahead and click on About Gold, because this is going to help me understand my own, kind of add to my own knowledge base of what gold is. It's telling me about the global market structure, the mining of gold, which is, kind of important to understand, even though that's kind of a specialized market. And that's it, right? So I can understand. So I can look at the gold mining, how it's actually mined, how it actually gets to market via the market structure, and then the regional diversity. In other words, who buys it, right? So it's telling me about the different countries: China, India, US. Some of these I knew, some of these I didn't. Turkey. Okay. So it's telling me where the major distribution centers are as far as how it gets from a finished product from the mines to actual region or global distribution, right? So like, for example, I knew about China because, again, if it's my interest, I'm reading articles on it, right? I have news alerts that help me with that. So I know that the Chinese central bank has been a very aggressive buyer in gold over the last couple of years. So that's not a surprise. India is not a surprise. India has a very, very strong consumer market for gold, which I'm sure some of you in the chat can attest to. And I did not know about Turkey, so that's a surprise for me, but that's me adding to my knowledge, right? And again, I'm not focused on data science here. I'm focused on knowledge here because, at the end of the day, data science does serve a purpose to some industry, right? So you guys with me so far, right? Only thing we're doing here is we're just broadening our base of knowledge, right? That's all we're doing. Because we want to be informed data scientists. We're not math robots. We want to be able to speak to the industry, to the trends, to the things that are happening. Okay? Let me just acknowledge the chat real quick. Leo, hey Leo, good to see you. Rahul, thank you for keeping order in the chat here. we got to keep Leo in line. Thanks for that. Okay, Rahul says he's with me. Shagun, my friend, do me a favor. Read the room, my friend. We're not doing questions today, okay? And I'm not a source for jobs. I'm here to help you guys, but Shagun, bad form, my friend. Read the room, please. Okay, so here's something else that's catching my eye, guys. Gold Hub. They have sections for professional investors and for individual investors, right? Both of those sound like pretty good resources for data, right? So if I go here, it's going to give me basically like consumer-oriented items here, right? It's basically going to try to encourage people holding more and more gold, right? So I get that, right? I get that they have these types of sections, but they also tell you here that you can get information on gold's performance, right? And that's where it's going to lead you to the previous section, or excuse me, the previous option, which is Gold Hub. And this is something that does require an account, and I have an account on here. But I'm pretty sure that just about anyone can establish an account on here. They're going to ask you what you do, or it's common for these types of things to ask you what you do. But you can just be honest. You can say, I'm a student or I'm an individual researcher. Most of these, types of report access allow for individual research, and a good number of them allow for students. I'm pretty sure that's how I signed up for this as an individual researcher, because I usually don't use my client information to sign up for things like this. I use my own personal information, right? So it's really easy to access these reports, even though they may be behind, an account wall. So don't let that throw you off. Again, that's part of doing the work, right? Part of doing the work is saying, hey, I'm going to treat myself as an individual researcher, and I'm going to go out and I'm going to establish these accounts, and I'm going to start reading. Very important stuff for you guys to do in your career, okay? Also, I forgot to say, and this is very important, guys, before we go any further, I have worked in wealth management. I have worked as a financial advisor before, but while I might have a financial advisor license, I am not your financial advisor. So nothing we're going to go over here is me giving you financial advice. This is purely from a research and data science perspective. So I got to give you that disclaimer, otherwise my lawyer will get mad at me. But I'm not acting as a financial advisor during any part of this session. All right. All right. So now we're getting to good stuff, right? Now we're getting to the actual reports. First thing that's catching my eye is gold demand trends. That sounds important, right? Gold market commentary. That also sounds important, but that tends to be a little bit less data driven, right? That's a little bit more opinion based, right? Which is okay, right? That can still be useful, but I'm much more interested in what gold demand trends has to say. But let's keep looking down. All right, see, now we're hitting a data section. That's fantastic, right? So now we're looking at performance metrics, right? Returns, volatility, correlations, and trading volumes for gold. All right. From a quant perspective, that's something that might be interesting, maybe. Demand and supply, demand on sectors on global demand, on gold demand, supply, production costs, and futures market positioning. Yep. That sounds interesting, right? Price and premiums, gold futures, benchmark gold prices. That also sounds very interesting, right? And then central banks, right? I'm interested in that because, again, I know that in the past couple of years, a lot of central banks have been very, very active in the gold market. China, Singapore, I can't remember what other country was really, really active. But central bank purchasing drives a lot of gold, right? Because, people like you and I may be able to buy a gold coin, but central banks are buying like massive quantities, right? So I'm interested, right? They have a data section. We're data scientists. This sounds like a perfect pairing, right? Leo says we're starting to mine data for gold. We've been gold diggers right now. We're getting there, Leo. We're getting there. Simon, can an average person learn how to perform this kind of exercise without going to university? I mean, learn everything by others. Simon, what do you think we're doing now, dude? Like, what do you think? Why do you think I'm doing this? Come on, try and keep up, okay? All right, guys. So I want to go ahead and I'm really tempted to start looking at this, but I'm probably more tempted to look at the previous section up here, the gold demand trends. Let's see what this has to say. All right, good. Look at this. I'm seeing some interesting downloads over here, right? We're always going to want to take a look at the executive summary because the executive summary sometimes also contains information on methodology. And as data scientists, we should always be examining the methodology, right? So right there, that's catching my eye. It looks like they have demand trends, which is great. That's probably going to be like their own like visualization based analysis. And then we have an Excel sheet. Fantastic, right? I'm telling you guys, I always tell you guys this. Most of these studies, a good number of these studies make raw data available. So I'm assuming like this might be close to raw data. And that's good, right? We need that. Because that's what lets us build on top of this. So I hope you guys are seeing that everything I tell you in these live streams is coming to life here. Because these studies, if you just dig a little bit deeper, they make their data available. Especially if it's a government study. If it's like a government funded study, sometimes, you know, like if you take money from the government to do research, like it's built into the contract that they have to publicly release the raw data, right? So the data's out there, guys. The data's out there. You just have to put in some of the work on your own. But I guarantee you that the data is out there. So I'm really excited here, right? This looks really promising. We have an executive summary. We're going to see their interpretation of the results, and then we're going to get raw data, right? Fantastic. I think we're on the right track. All right, so let me go back to my goals. We have an interest. We have found a source for that interest, right? Clearly, we're on the right track with gold.org. And then what does this data tell us, right? Okay, so that's the stage we're at now, right? Are there portions we can verify for ourselves? Are there portions that might not be correct? Let's find out, right? Because everything that we're going to see in these things like the executive summary and the gold trends, it's all their interpretation, right? Doesn't mean it's right. Okay, good. It looks like there's more charts here. It looks like there's more tables here, but that might be the same table. Yeah, that's the same table. It's in English, maybe a different language. No. So this is the same download. This looks different, right? The charts PDF. But yeah, I mean, this looks all very promising, guys. And it looks like they also have different sections for the outlook, for jewelry gold, investment gold, central bank gold, and the technology behind it. So this is great, right? This is all looking very promising. All right, so let's start looking. Are these interactive? They are interactive. Where do I want to go with this? Let me look at let's look at the chart gallery. Let's start looking at what charts they have. Okay, so this is all their charts. All right, cool. This is good. So, let me know if that's big enough for you guys or not on the screen. Maybe I can make it a little bigger. Yeah, maybe that's better, guys. Oh, shoot. All right. So this chart, it's not the greatest visualization I've ever seen. But they're basically telling us what gold is being used for. Or excuse me, the demand of gold, right? So the different colors represent different industries, right? For jewelry, for ETFs, for technology, for central bank purchases, for bars and coins, and for OTC investment and stock flows, right? So the first thing that's jumping out at me is that jewelry is consistently the largest category, right? The blue bar, this blue section here, right? The jewelry fabrication, as they call it. Consistently the largest category. Another thing that's jumping out at me that's rather obvious is this one here for Q2 of 2013. Pretty high, right? There's kind of a spike in demand there, right? So that's interesting to me. And what's this other one? Q2 of 05. Okay. So, all right, guys, let's focus on this. I like this. Let's focus on this. And again, this is me just sharing my thought process with you. And these are the questions that I'm asking myself that I'm hoping that you will eventually kind of develop and ask yourself. So give me your thoughts here, guys. Does anybody find something interesting about those spikes? We have two spikes, right? Here's a spike and here's generally a spike, right? You could argue that's not so bad here, right? But what about these spikes should be interesting to us? And by the way, keep in mind that these are per year, but for the same quarter, right? So this here is Q2 of 2013, and this here is Q2 of 2012, the year previous, right? So what do you guys, does anybody want to contribute here? Is there anything that's jumping out? And if the answer is no, that's okay. Let me know that in the chat too, right? Give me some feedback here to help me understand where you guys are at. But does anybody want to take, form any theories on why that happens? Yassine says a total bar and coin contributes to the most. No, Yassine. Right now we're just focusing on jewelry. So these bars, these blue bars that I'm highlighting, is jewelry alone. So bars and coins would not play into this. We're looking at jewelry exclusively right now. All right. Mickey says, great. Mickey, great observation. What happened in 2013? Yeah. What did happen in 2013, right? That's a heck of a spike, right? So yeah. RP, Altamar, Gold, ETS. Yeah, no, we're not looking at that, right? We're just looking at the blue bars. We're going to get to the ETFs and everything else, guys. But right now we're focusing just jewelry. Right? Because that's what these blue bars represent, just the jewelry sector, right? Leo says, I would go for what causes that spike on purchase, financial scenario, and everything. Yeah, okay. Okay, Leo, I like where you're headed with that. Rahul says maybe the prices dropped and jewelry was bought. Yeah, it's possible, but why just 2013 though, right? Like that's kind of weird that it'd be just that year, right? And also, I mean, guys, look at this. Q2 of 2020, it's like terrible, right? But yet we have these spikes. Anybody else? I'll give you guys another 30 seconds or so here. And then I'll share my thoughts. Yeah. So Mickey, I think you're hitting on the obvious answer there, right? That's probably due to the COVID lockdowns, right? This one here. So yeah, so that does make sense, right? Yeah. So the lockdowns and the pandemics, yeah, seems to have significantly affected the jewelry market. Yep. I think we can all agree on that, right? Okay, guys. So here's what I'm thinking, right? Okay, Leo. Leo, I love where Leo's thinking here is Q2 can be justified by crypto spikes during the pandemic. Okay. All right. Leo, I appreciate that viewpoint. Yeah. Yeah, Leo, I like your viewpoint because now you're taking it to the next level, right? Because one, you're bringing in additional data because we'd have to prove that there was a crypto spike, right? And two, you could also be like getting onto like an investment thesis, right? That maybe there's like some relationship there, right? Now, it would be kind of risky for a thesis because we know a lot of things were crazy in 2020, right? It wasn't just crypto and gold, right? A ton of things went crazy. But yeah, but I like where you're thinking in that, right? So also in 2020 to COVID, yeah, Fatima, I think we've hit on that answer for sure. Mickey, what are the countries that were top in the other visualizations? Okay, Mickey, I love that thinking because it could be geography driven, right? I like that, Mickey. Could there be something significant in those places in 2013? Yeah, maybe. All right, so I love where you guys are thinking about this, right? Here's the things that catch my eye, right? Q2, right? I've worked a little bit in retail and manufacturing. So the Q2 part is what's catching my eye. It's catching my eye because Q2 is usually when most manufacturing happens for the rest of the year, particularly and I'm particularly referring to Christmas, right? I know that, not everyone's a Christian around the world, but people, quite a bit of the population celebrates Christmas. So Q2 is when most of that manufacturing happens to be ready for the Christmas season. So that's what's catching my eye, right? And what's catching my eye is not so much that it was 2013, it's that this should be fairly steady, right? Because if I'm forming that investment thesis or that theory, or not even an investment thesis, but that data science thesis of people give jewelry for Christmas, so we would expect strong demand by the jewelry industry in Q2, then I would have expected a much smoother line, right? So I love the fact that you guys are bringing in COVID and crypto, but I'm taking a little bit more of a traditional like manufacturing scheduling type of thing, right? Q2 for a lot of industries is like prime time Christmas time. Like they're trying to get everything out the door for Christmas. So that's what's surprising me about. Like there shouldn't be any spikes. This should be fairly flat because presumably jewelry demand at Christmas is pretty high, right? People give it as gifts, right? So that's what surprises me. Like there shouldn't be any spikes at all, right? So that's my first observation. My second observation is look at everything that's happened since 2013. We haven't had levels anywhere close to that, right? I mean, these levels since 2013 are terrible, right? And it's been enough time where you could probably smooth it out for, economic conditions, right? If you were to take an average of these values, they would be significantly lower than the 2013 spike, and really most of the average ahead of it. So this, to me, could also indicate a consumer taste change, right? Not everybody likes gold. Not everybody wears gold jewelry, right? I mean, like I like watches, and I have some nice watches, but like when you wear like a full gold watch, like it's like a whole other level, right? Like, like you're asking to get robbed when you do that, right? Like, so, maybe gold jewelry has fallen out of consumer tastes, right? Because if you were to bisect this data into 2013 and before, and since 2013, it's kind of different averages, right? I mean, significantly different averages. Even when you smooth out for COVID, it's, maybe there's been a change in consumer tastes, right? So maybe that's my data science project. Can I prove that there has been a taste in consumer taste since 2013? I think I can, right? I think I have the data here to do that, right? But that's what catches my eye. But I love what you guys are talking about, right? Maybe crypto, right? Maybe it's geography based, like I think Mickey said that, right? Who knows? But these types of exercises is exactly what leads to those questions that I told you guys about, right? Like Leo, you have a question. You have a perfect question, right? You're saying, hey, wait a minute. I know crypto. I know that 2020 was a special year for crypto. Maybe there's something there. That's a question. And as I say, questions usually make into good theories or hypotheses that you can use in data science studies. So I'm really hoping that you guys are seeing that chain come together, right? I found this source, I found this report. Hey, that looks kind of funny to me. Why is that? Oh, maybe it was, oh, wait a minute, I can prove that, right? So this is great, guys, this is great. All right. So does Dhanteras, in which Indian families buy gold and jewelry, and Diwali comes. Okay, great, Rahul. When is Diwali? Is that also late in the year? I'm assuming it's after Q2. Like, is that something that people would be preparing in Q2? Like, manufacturers would be preparing in Q2. I mean, help me understand. I can't remember when Diwali is. I realize it's a huge holiday. I've been to Diwali celebrations. It's beautiful. But yeah. Okay, Mickey says, yeah, that's after Q2. Yeah, great, Rahul. Thank you for that. So Christmas and Diwali, right? Like we said, I know that India has a high consumer demand for gold. So, yeah. So to me, I'm surprised there's spikes at all. I would have expected it to be smoother, right? Because that's when manufacturers are getting ready for Christmas, for Diwali, for other global holidays, Like Thailand's another big consumer market for gold, and I'm sure Thailand has holidays after Q2, right? So I can prove that, right? I have the data for that. Do global holidays drive jewelry demand for gold? Maybe not. Let's find out. All right. Mickey says, but why the peak in 2013? That's a valid point about taste. Mickey, great question, right? Great question. You have the start of a data science study. If you wanted to, you could say, hey, 2013 was an anomaly. I want to find out why. That's a study. Yeah. That's a study. Go for it. Simon says, the internet says that gold rates dropped drastically in 2013. Okay, great. Wonderful, Simon. Thank you for that. All right. So, Mickey, there's your potential answer. Maybe jewelry manufacturers stocked up, right? They stocked up as a hedge. Because, you know, if you're a manufacturer and gold rates dropped in 2013, as Simon tells us, then hey, you're saying, hey, gold's never going to be this cheap again. I'm going to be in business for the next 20 years. I'm going to buy now. I'm buying all I can. Right? I'm going to use it. It's not like it's wasted money. I'm just going to, it's never going to be this cheap again. Yeah. So Simon, you found a potential correlation there, right? One, can you prove the correlation happened? Two, did that correlation lead to the subsequent drop, right? Maybe jewelry manufacturers bought so much that they didn't need to buy any more for 10 years. I don't know. Right? That's something else to think about. But Simon, you have a valid start to a study right there. What were the effects of the 2013 price drop on jewelry manufacturers' demand for gold? Like that's it. Like that's the title to your study right there. Like I just gave you the title for your study. Like that would be a cool study. Rahul says, in India, whenever there is a price drop, a lot of people buy gold, mostly jewelry. Or they might have a lot, but still a more trusting investment. Yeah. There you go, Rahul, right? Maybe 2013 made it attractive for jewelry people to buy. Now remember, because we're just looking at jewelry right now. We're going to look at some of the other ones, right? Yeah, so Rahul says Diwali's after Q2. Yep, thank you. Rex says, it's quite insightful to see the thinking process live, not an artificially thinned out process of how data science works. Yeah, cool. Thank you, Rex. Appreciate that feedback. Mickey says there's a super big drop in the ETF that year too. Okay, we'll look at that. You guys have mentioned ETFs and you've mentioned bars. We're going to take a look at those because I'm interested in those too. Michael says, hello guys. Hey, Michael, how are you? Good to see you, my friend. Mickey agrees with Rex. So thank you, Mickey. Appreciate that feedback. And I'm glad you guys are liking this because, you know, I'm just walking you through on how I would literally start studies. I mean, right now we've already identified just a couple of studies for you guys. You guys are coming up with great observations. Those are studies, right? Those questions you're asking are studies. Go out, do them, put them on your LinkedIn, walk into your next interview with 3 of those. I guarantee you're going to have a completely different experience with your interviewing process, guys. So I'm really glad that you guys are catching on here. All right, cool. So let's keep on looking, right? All right, so we've mentioned bars and we've mentioned ETFs. All right, so let's look. All right, so ETFs is pink. All right, guys, so this is ETFs. All right, give me some observations. I mean, I think the obvious observation is that it's very spiky, right? I mean, it's all over the place, right? So what do you guys think? Give me your observations. I'll make my own. Nothing's jumping out at me so far. But yeah, give me your observations, guys. Would love to hear it. ATM says, yes, I find the thinking process of a project the most valuable piece of this stream. Yeah, thank you so much, ATM. And yeah, I mean, you know, my goal is not for you guys to go out and start doing gold articles, right? My goal is for you guys to take this as a framework and say, well, I'm really interested in F1. What can I find out about F1 and work on that, right? Or I'm really interested in crypto, right? Leo mentioned crypto. What can I find out about crypto, right? So yeah, absolutely, ATM. Appreciate that feedback. And this is why I do these things, right? I'm just dumping. I'm just doing a brain dump, as they say, right? I'm just telling you how I would go about it. You know what my trained eye sees, and then hopefully you guys can run with it, right? The professor says, does ETF mean equiangular tight frames? No, it does not. And you know what? You're asking a good question. And again, guys, I have worked in wealth management. I have been a financial advisor, but I'm not your financial advisor. ETF stands for exchange traded funds. It's basically a fund that manages a certain asset or certain types of assets, but it's openly traded on the stock market. So it's a way for you to trade an asset, but you also buy it and sell it like a simple stock. So for example, there is an ETF for gold that lets you buy gold, and that way, but you buy it and sell it just as a stock on the open stock exchanges. So, for example, most people, most individuals don't hold physical gold, right? They don't hold it, in their hands, in their safe at home or whatever. You can just buy the ETF for gold and you would still get the same returns. So there is an ETF called GLD for gold that you can buy. And that's mostly what this is referring to, because I believe the World Gold Council plays a role in the management of that ETF. That relationship has not always been clear to me, but there is a relationship there. So basically, think about when you hear about ETF in our discussion today, think about it just as gold, as the value of gold traded as a stock, right? And you can look it up. The stock symbol is GLD. I hold some GLD in my portfolio. I manage my own money. But that's what you should be thinking about when you hear ETF, and there's a few of them, right? There's GLD, there's IAU. Goldman Sachs also has one. I can't remember what it's called. But basically, it's just a way to own gold in a digital way or in a stock form. Okay. Mickey says, my struggle is that sometimes finding the available data. Mickey, we found this data with like one Google search. It was like the second result in Google. The data's out there, guys. The data's out there. All right, so Leo says it shows the correlation, by the way, the low prices and high demand for 2013. But wouldn't there be high demand for the ETFs too? Because the ETFs would have also dropped in price, right? But Leo, it would have dropped in price. So wouldn't it have been cheaper to buy the ETF? So let's start, right? So what this is telling me, kind of building on Leo's point here, was there a panic? Because remember, guys, yeah, Mickey, I think you're on the right track here. The average consumer of stocks may see the drop in price and drop the stock. Yeah, Mickey, that's exactly where I was going. I think you're on the right track there. Because remember, guys, we're talking about two completely different consumers now. In many ways, you should put the jewelry people to the side, because jewelry people view gold as an asset, right? As a tool, as a supply. Whereas your ETF is much more people like you and I. Individual investors and institutional investors, right? There's plenty of institutional investors that also use ETFs for gold, right? A big bank is not going to hold gold in their safe, right? So to me, this indicates a panic, right? The individual investor panicked. That's what it indicates to me, right? The individual investor said, oh my God, gold is dropping. I got to get out of this stock. I got to get out of this ETF. Right? So that's what it indicates to me, a little bit of panic buying or panic actions, right? And then a couple years later, for the next 2 years, that panic kind of remained, right? I mean, that wasn't great. And then here we saw a recovery, right? But what is that? That's 3 years later. But that's what that indicates to me, right? That the jewelry market, the users of gold, the manufacturers of jewelry, saw an opportunity, whereas the individual investors, like in ETFs, saw a panic. They saw disaster when other people were seeing opportunities, right? So that's another study, right? What's that Warren Buffett saying, right? Sell when people are celebrating, buy when people are panicking, right? The individual investor didn't follow that here, right? The gold market panicked and they panicked too, right? They should have been buying if you follow, Warren Buffett, right? But they panicked too and they drove the ETFs down, right? So right there, that's a study, right? That's a study. And actually, that's a very provocative title, right? Do investors follow Warren Buffett's advice? Like let's make that an article on LinkedIn. Like literally make that your title. Like that's a provocative title. I'd read that. If you send me a resume and you tell me that's the title to your article, I'm clicking on that article. Like that's a provocative title. Right? And here's a start. You'd have to find other assets and other situations, right? But this is a start to it. Right? You could say that. You could say, hey, I have gold data that says that investors don't follow Warren Buffett's advice. They should have been great buyers in 2013, but they weren't. 2 years later, they were. But I'm guessing that the gold market had recovered by then, right? I'm guessing that the gold market was probably better 2 years later. Generally speaking, since that time, the gold market has been fantastic. And in the past year, it's been amazing, right? Like you've probably made a decent amount of money if you've been investing in gold, even just in the last year, right? So this kind of goes against that Warren Buffett advice, right? So yeah, there's a study here. Coming back here, what's this? This is 2020, okay? All right. I think we can all take a pretty good guess at what happened there, right? People thought the world was ending. Let me buy some gold. People view gold as a safe asset, right? All right, let me look at some of the chat here. Market unsure or not predictable enough, so the investment would be low. But Rahul, Simon told us that 2013 there was a collapse in gold prices, right? There should have been buying, not selling. Casual economist, welcome. If the ETF is high, sales might be lower. Rahul says not necessarily. I agree, not necessarily, Leo, because remember, we're talking about two completely different audiences now. The jewelry items that we saw earlier, the fabricators, they're not buying for investment. They're buying because it's just cheap. And like I said, if I'm a manufacturer, I know I'm going to use it. I don't plan on going out of business anytime soon, so let me buy 10-year supply. Right? That makes total sense, right? It's a hedge, right? Whereas the ETF is people like you and I. Just, mostly individual investors. Again, I know institutions use it too, but it's mostly just individuals, right? So Mickey says, I think as well, consumers weren't as well versed in stocks, tend to invest in ETF more than individual stocks when they play into the panic. Maybe, Mickey. The thing is that there is that in this particular scenario, because you're right, some people might do that for some ETFs. But in this particular scenario, the gold ETFs only invest in gold. It's not like a technology ETF that might spread the money around, 50 different companies. This is particularly for gold. So it is kind of like buying an individual stock in the sense that you're just buying into gold, right? So I'm not sure if I'm fully on board with your sentiment there. Simon says shift to alternative metals. Some jewelers begin exploring alternative metals like silver or platinum to mitigate losses. Yeah, Simon, I think that holds for our previous look at the jewelry manufacturers. But it wouldn't hold for this because again, guys, just to be clear on this, guys, we are talking about two completely different consumers, right? So Simon, I'm on board with the previous study, but not for the ETFs because a jewelry fabricator would most likely not be an ETF participant. Again, for them, gold is a tool. It's an asset. It's a supply, right? Their investment is in the final jewelry they sell, the finished product, not in the physical gold. You get what I'm saying? So keep that in mind, guys, right? You have to make sure that you're making these distinctions also, because otherwise you're going to have a flawed study, right? You don't want somebody like me to come along and say, well, whoa, wait a minute, you got this wrong because you tied two groups together that don't belong together. All right, so that's another thing we should talk about. It's also up to you to take a very measured, pragmatic look at the data and be able to break that out and say, whoa, wait a minute, I might be making a mistake here. I can't make that relationship because there is no relationship. So be careful with that, guys, okay? Rahul says, if the prices drop of something you sure will go up a lot, will jump ship, but some would hold too. Rahul, that's your hypothesis, yes, but the data says no. Right? The data says that people ran. So I'm hearing a good hypothesis from you, but the data says no. So Rahul, this is a good opportunity for me to also remind you guys, kind of coming back to my previous point also. One of the things that I'm constantly telling my corporate clients, let the data speak to you. Do not speak to the data. Let the data speak to you. Right? Because Rahul, if you're saying that, then you're speaking to the data, right? Does the data show that you're right or wrong? This says that you're wrong. This says that no, investors ran. People ran for the exits. So you got to let the data speak to you. And the data says no. Data says people panicked and they got out of ETFs. And it took about 2 years to recover. Right? You can make that statement, and that's a data-driven statement, right? That's an informed statement. So I hear your thesis. It sounds like a good thesis, but the data says no. The data says that what's that saying? Everybody's your friend until the rent comes due, right? People ran. So yeah. So I love the thesis, Rahul, but the data does not support it. If the ETFs are low, they might sell more jewelry because gold is cheaper. No. I'm not sure if I'm on board with that, Leo. Because the reason why manufacturers would participate in a hedge is so that they don't have to lower their prices in the future. That's why you do hedges. Because that way, no matter what the price is in the future, you know that you paid a lower price than that. So you don't have to adjust your price. Right? That's why hedges exist. So I'm not sure if I'm on board with that, Leo. Most of these, jewelry manufacturers, and really a lot of right? Because this is not exclusive to the gold industry, right? If you're like a wheat farmer, right? A wheat farmer doesn't sell for today's prices. They always have an option or a hedge or something involved. Because that way they know, hey, I can produce for X dollars today and I know I'm going to make a profit because I have this hedge working for me. And I don't care what the prices are tomorrow. I'm still making money. So yeah, Leo, I mean, it sounds good on paper, but in practicality, for like a study, how you would want to present that, it wouldn't hold. It wouldn't hold. Rahul says some may buy too. Maybe, but they didn't outpace the losses, right? They didn't outpace them. So it was probably still a small number, right? Leo says, we can't mistake the ETF's trader behavior with the jewelry buyers. They're opposite from each other. Yeah, that's exactly right, Leo. Yeah. And it's important to make sure you guys make those distinctions. Because again, if you don't, you could end up with a flawed study, right? And if you end up with a flawed study, somebody's going to call you out on it. I've done it. I've called people out on flawed studies, right? So you got to be careful with that, guys. But yeah, Leo, I think you're on the right track there with that distinction, right? Rahul says, Dennis, my point was panic too for investing in ETF as the prices fall. Yeah. I mean, the prices did obviously fall and cause that panic. Yeah. Rex says, let the data speak to you, as in torture until it confess. That happens too, right? Sometimes you start seeing things that aren't really there, right? Right? Sometimes you get into these conversations where like you can tell your client wants to take the data somewhere that it's really not supposed to go, right? Oh my gosh, excuse me guys, I'm sorry. They want to take the data somewhere it's not supposed to go, right? Rahul says, maybe I'm not sure about ETF. My point was if a new buyer gets a low price of something which he knows, it would rise. So that was my thought. Rahul, again, I'm not disagreeing with your thought. And we all have different thoughts, but does the data support it? Right? I mean, we're data scientists. We're not thinkers. We're not philosophers. We're data scientists, right? So I hear you. It's a good thought. I'm not disagreeing with your thought. But I'm saying that the data isn't there. You can't support it. Like, look at these pink bars here. Like, how would you support your statement with that? You really can't. You just can't. Does lower interest rates make people look for options like investing in ETF for better returns? Professor, what you just wrote looks like a great title for a study. Go find out. You just wrote a perfect title for a study that you can put on LinkedIn and add to your portfolio. I mean, seriously, guys, look at what Professor just wrote. That's a study. And this is exactly what I'm telling you guys. Professor has been following along. He's been seeing our discussion. And he says, hey, wait a minute. I know a little bit about interest rates. Well, what role is that here? That's a question. And a question, what do I tell you guys? It's a pretty good start for a thesis or for a hypothesis. And if you have a hypothesis, you can form a study. So Professor, thumbs up to you. What you just wrote, it is the title to your study. I want you to literally take that title and go do a study on it. It's perfect. You literally just came up with the ideal title for a study. So yeah, you're going to have to go get the data. You're going to have to go source that. You're going to have to, create correlations and whatever other, methods you want to apply because, you're the researcher. come up with conclusions and talk about the business impact. Why would a gold manufacturer, an ETF manager, or whoever want to listen to your study? Well, because my study showed the X. And X is going to have Y impact on your business. So, Professor, again, thumbs up to you. You got a study on your hands. This is fantastic. Rahul says, I get the data. I was saying it's not necessarily a correlation between jewelry and ETF. Yeah, but we know that just because of the two audiences, right? I mean, there's nothing to prove on that one. That's just the way the study was run, right? All right. I want to look at one more. And really, I kind of want to look at two more. Let's look at the central banks. All right, guys? So this is purple. Central banks are purple. What do you guys think? Talk to me about central banks. Remember, this is a third audience we're talking about, right? There's something that I spot in here. There's two things I spot in here. But I want to hear what you guys have to say. But two things are catching my eye right off the bat. Excuse me. Two things are catching my eye. What do you guys think? Remember, central banks, whole other ballgame. Bigger purchase sizes, right? Different ways of purchasing, right? They're not out there buying in an ETF, right? So, what do you guys think? Leo says, haha, nice, Professor. Yeah, kudos to Professor. He came up with a great study. I mean, literally, guys, take that and run with it. Go do a study on that. I'd read it. All right, so we're looking at purple central banks. Tell me what you guys see. All right, Mickey says they sell when the price is high and buy when the price is low, perhaps? Okay. I'm not sure if we have the data to show that here. But okay, I appreciate the observation. Anybody else? I imagine they have a lot more data to make their purchasing decisions. Yeah, presumably. Altamar says central banks followed Warren Buffett advice. Did they? I'm not sure if I'm on board with that, my friend. I don't know if I'm on board with that. Anybody else? So I actually just realized that Mickey and Altamar are basically saying the same thing, right? Yeah, I mean, you guys are basically saying the same thing. Altamar says a shift from seller to buyer after the 2008 crisis. Yep, yeah, Altamar, a good observation. That's the same one that caught my eye. One of the two that caught my eye. Yep, I mean, clearly, right? They were net sellers up until 2008, right? And they were net buyers every single year after that. That's quite a shift, right? So yeah, Altamar, yeah, absolutely. That's one of the observations that I made too. So yeah, good eye on that one. Anybody else? And give you guys another 30 seconds here. Rahul says, I don't know much history. Okay, Rahul, you're hitting on an important point. I'm going to come back to that. Definitely going to come back to that. Simon says, even if the global economy fell, the central banks did not decrease their gold purchases. Yeah, sure, Simon. I'm on board with that. If anything, they increased it, right? I mean, we've had a couple of crises, and I think even one recession since 2008. I think we had a recession like in 2012, I believe. And yeah, it doesn't matter. They've been net buyers since then. So yeah. Mickey said, I said that wrong. Okay, well, feel free to correct yourself. But anybody else? Last call. Purple boxes, central banks. Remember, now this is a third audience, completely different than the other two audiences we had talked about, right? And I'm emphasizing that because you got to keep that in mind, right? Otherwise, you'll have a flawed study, and it's terrible. All right, guys. So, as Altamar correctly pointed out, there's clearly a shift since 2008, right? 2008, central banks have been net buyers, right? So Mickey asks, is this data the whole timeline of the bank's history of buying, selling gold? No, it's just since 2000, so 24 years. So it's not the entire history, but pretty good data set, right? Leo says central banks buy and sell for different reasons. Ah, yes, very good, Leo, very good. So let's talk about that. The internet says 2008 was a global financial crisis. Yeah, absolutely. Absolutely. Yeah, so we know the cause of it, right? We know that 2008 was a terrible year all around the world. And the central banks have replied by being net buyers in gold since then, right? So why? Why is that? Like, what's driving that? And like Leo says, they buy and sell for different reasons. Why? And I'm asking that as a rhetorical question, right? I'm not asking us to speculate. I'm saying that's a study, right? If you were to sit there and take that one step further and say, well, I think it's because, whatever, because of the global housing supply, right? Okay, that's a study. Go and prove that out. You're going to need more data. But this is how you form those theses, those hypotheses, right? And say, wow, I'm seeing this big shift. I want to find out why. Right? Like to me, a good article on that would literally be titled that, why have central banks been net buyers in gold? And then your paper would present like three different options, and then the conclusion of the paper is to say these are the three. This is the way I would rank the likely the probability of each one of those options. Like, that's a pretty good paper. I'd read that, right? If you told me, hey, I wrote this paper that has three different explanations for why central banks have been net buyers in gold since 2008, and I'd like for you to read it, before you interview me, I'd read that. Like, that's a good paper. So, yeah, I mean, clearly there's been a shift since 2008, right? So here's the second thing that I noticed. And I've been emphasizing that we think about these as three different, collections of people, right? And they are. But here's what my eye is catching me. Oh, shoot. Sorry. Before I go to that second one, I want to address something else. Because, Mickey and Altamar mentioned about the central banks following Warren Buffett's advice. And Rahul says he doesn't really know a lot about history. So this is where a little bit of local knowledge comes into play, right? So, maybe some of you guys know this, maybe you don't. But generally speaking, over time, gold is an investment that goes up, right? If you were to look at the historical, chart for gold, it's always upwards, right? Obviously, there's dips along the way, but generally speaking, gold is upwards. So I don't know what the price is, what the price was in 2000 when this chart begins, but I 100% guarantee you that it was a lot lower than it is today. And then if you were to move forward 5 years, it was a little higher, another 5 years is a little higher. It just always goes up, right? So that's why when I saw those comments about Warren Buffett or, buying when the price is low, price is high, today's gold price is basically never going to be cheaper than what it is today, right? Like, gold's never had a scenario where it just dives. That just doesn't happen with gold, right? So that's why when I see this, I'm also seeing a correlation to the price. So you really can't say that they've been buying when they're low. If anything, they were net sellers when gold was low. Because I guarantee you it was a lot lower in 2000 than it was in 2012. I mean, I literally don't know what the numbers are, but I'm willing to bet my life on that, right? Like gold has just always been upwards. So it doesn't hold that the banks were following, Warren Buffett's advice. If anything, they were the inverse of it. Right? So keep that in mind, guys. At the time of crisis, central banks sought to diversify their reserves away from currencies like the US dollar and the euro, which were under pressure during and after the financial crisis. Maybe. That's a potential thesis, sure. You can probably research that a little further. Personally, I've done a little bit of research on this, and I think that there might be other reasons, but yeah, you never know, right? You never know. All right. So I mentioned the second observation that was jumping out at me. Okay. And we've talked about these 3 different groups, right? But again, you're a data scientist, right? You're a living and thinking human being. What do you want to do next? Well, the next part is to start thinking about some of these groups. And the other group that's catching my attention is this one, the green one, total bar and coin. So again, this is just me thinking on my own, right? And it's healthy for you guys to do this, right? Because the answers aren't always obvious, guys. The answers, take some effort on your part. So here's the reason this caught my eye. Who buys gold bars? I don't know what the current price is now, and I can't remember the troy ounces, but a bar is like a full bar of gold. I think it's at least $500,000 now, because gold has been on an amazing price run, right? I mean, gold hit a new all-time high yesterday. I mean, a bar of gold is I'm thinking is more than $500,000, maybe $1 million. I really should have researched this prior to this, but a bar of gold is not a cheap buy. Like, not just anybody buys bars of gold, right? Coins are a little bit more affordable, right? But, there are some gold coins that are, multiple ounces, so they can be pricey. But a bar is like easily a 6-figure plus investment for one bar, right? So aren't gold bars and central bank purchases kind of correlated? I think they might be, right? I mean, central banks are known to hold physical gold, right? And, it's no secret that Fort Knox in the US holds them. That The New York Federal Reserve has a big pile of gold. In fact, they hold gold for other countries, right? Other countries pay the Federal Reserve to store their gold, right? Their gold, like their physical gold bars. Sarvesh says central banks buy gold bars, countries buy bars. Yeah, that's exactly right, right? So guys, is it possible that these green bars and the purple bars are correlated? I think yes. I think you could make the argument that bar purchases and central bank purchases are correlated, right? Like, I think you're on solid ground to make that argument. The average person on the street does not buy gold bars, right? So can you make an argument that these are correlated? And if they are, it kind of sort of changes the picture on this, right? Kind of sort of changes your view on central banks, right? So, but again, you as the researcher have to make those connections. So let me go back to my whiteboard. Remember on this whiteboard, are there any additional steps the study could have taken? You could say, yeah. You could say, hey, I think the study maybe made a mistake here. I think they should have put central banks and bars in the same grouping, and that completely changes your study. Or you can go back and say, if you combine those, then the data for 2013 is wrong or whatever. Or if you combine those, maybe 2020 doesn't look all that bad, right? Because obviously 2020 was a crazy time, right? So, but again, that's you acting as the researcher, making those decisions. And that's how you form those questions. That's how you form those studies. That's how you bring a unique spin to your studies. Because remember, you don't want to copy this. You want to build upon it. Right? So to me, that's jumping out at me. Like I would be researching that. Like you guys have made some great suggestions in the comments. But I would be like, that's something that I would research. Right? Like, wait a minute, like who else is buying gold bars? It's countries. Right? Like why are those not the same group? And what happens if I do make them the same group? Now how does the picture change? Right? I mean, you got, a couple of you guys got it right as soon as I said it, right? The central banks buy the gold bars, countries buy bars. Yeah, so why are they a separate group? Maybe we need to research the methodology that the researchers use, right? They have a methodology section. Maybe you need to look at that a little bit, right? But these are the types of connections that I want all of you to start making. And start saying, "Whoa, wait a minute! I think there might be an error here. I think there's an opportunity here for me to add my own perspective." You guys with me on that? I mean, I think that's an important point because this is how you can find those little twists that you put into your own data, into your own studies. Okay? Let me know what you guys think about that. Let me know if you're on board with that. But, again, I'm just sharing my thought process, my brain dump with you guys. And and you want to know the crazy part, guys? We've only gone through one chart. This is just one chart of like, I'm pretty sure they have a lot of charts here. There's another one, another one, another one, another one, another one. Like we've only gone through one chart, guys. We're literally on chart one. We're literally on chart one. So again, guys, I hope you understand everything I've told you guys. Read, find your interest, get the research, find the trade industries, Go find the reports. They have the raw data. We're seeing it come to life here, guys. And this is exactly why I don't give project ideas, because it takes effort. It takes just a little work on your part, but you can get there. I mean, like 3 or 4 of you came up with totally valid studies just in the last hour and just by looking at one chart. Like, we've only done one chart, spent an hour and a half together, and you guys came up with like 4 different studies. Like, that's awesome, right? And this is just one industry. I mean, we could repeat all of this for silver or for soybeans, right? Or whatever, right? Whatever you want to do. So Leo says, maybe understanding from all the reasons that motivates a central bank to buy and sell, which one has more impact on what we're trying to understand in our study. Yeah. Sure. Yeah, can you find correlations in other data out there that corresponds to their gold purchases? Sure. That's a study. Maybe a little bit more advanced. But yeah, you could probably go out and do that. Sure. That's totally valid. So yeah, I would definitely encourage you to do that, right? All right, guys. So here's the reality. I had intended for this to be, a fairly compact session. I have a couple more items I still want to cover, believe it or not. But we have gone a while. I had no idea that we would go for an hour 40. So I think I'm going to make a part 2 out of this because there's just a lot. And there's still more I want to cover with you guys. I had a whole other section that we haven't gone through that I really want to cover with you guys. So we're going to stop here. Have really appreciated all the participation. Look for part 2 to come next week.